Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar still remains contained by the resistance level of 73.65 and relatively was a quiet night. Nevertheless, the market still looks somewhat weak in terms of this recent two-day rally, and therefore I feel the market may retreat from this level of 73.65 and look back towards 72.75 as an intraday support, with the base seen around 72.25. Well, as expected, the ECB kept interest rates on hold at 0%, and the market found strong resistance around the level of 110.90 to 111.15 after backing away from there rather sharply, and now poses a downside threat. In light of US economic numbers, the anticipated number for the CPI came in on forecast at 0.8%, with the core CPI coming in on forecast at 0.5. This was a rise of for the month on month, it was up by 2. So the market was still a little bit concerned about how high the inflationary numbers are. Still, the market, from a technical point, the US dollar holding, which still holds to a bullish case to eventually reach a target of 100. This in terms would see the euro look back towards the downside of the call that was recently around 107.55 or 50 to 85 area and reassess from there. The dollar yen story still remains relatively firm as the market still continues to look towards its top side of the range around 116 figure 35. Like previously seen on the last two attempts, that is, the market has staged a significant reversal or downturn. I anticipate this may again happen and therefore look back towards the bottom side of the range around 114.70. The pound still remains relatively weak and still looks towards that bottom side support level at 130.60. In light of the recent inverted hammer, the market failed to sustain those gains and couldn't take out the top side resistance seen around 132.10. Let's see if the market bulls return back at this level, as I feel that we could see a rebound from there and look back towards the top side at 132.10 to 132.80. This has seen a sharp reversal for sterling Kiwi as it now looks back towards the support level of 190 figure 25. I'm getting a little bit concerned. The fact is that this market is struggling. If we do take out 190 figure, then we could be looking down towards 188.40.60. After the recent downturn for gold, the market still respects this level, that is around 1,960.70. Although we did see some pressure on that level of 70, it didn't actually quite break it. Still, we're waiting for the confirmation to support the bear case, and a break through 1,960 should support the RSI and therefore see the market drop. This ADX is way overheated, and so it is called for pullback after the recent highs around above 2,000, and therefore a break of 1,960 would expose a region of 1,940 and reassess from there. When it comes to oil, the market is still respecting this level of 100, although I feel the market may actually take this level out due to the recent heavy downturn from near 125 down to 100, and now they've given back the gains again overnight, and also with a heavy RSI could see the market drop back towards $96 a barrel and see how we see the pattern from there. If it still remains weak, then we could even see it back towards the $90 range. Well, that wraps it for the morning. Thank you very much for joining me, but please keep an eye out for the intraday report and the end of the day wrap.